Today we have a returning guest, Rob Kirby. He's with KIRBY Analytics, that's KIRBYAnalytics.com, and I am very happy to have him back.
Dave, it's a pleasure to be with you once again.
Hey, thanks for being here. And I wanted to start off with what's happening to globalism, because we're seeing that the U.S. shot down the Paris Climate Accord. The U.S. is telling other countries they have to fund NATO. We're seeing that we're reworking NAFTA. The TPP is dead. Sent a representative to the Belt and Road. And now we're changing the banking regulations. Do you see globalism being dismantled? What's happening with globalism right now?
I believe that globalism has hit some very, very large speed bumps, but I do not believe that globalism is dead and buried, at least not yet.
So when you say not just yet, what do you mean? Like, do they have something planned, or do they have something else up their sleeve, or is go ahead.
The answer to that question is yes, I believe that they have things planned or up their sleeve. These people have shown a great deal, when I say these people, the globalists have shown a great deal of resilience. They seem to double down at every opportunity. It's like with this Trump-Russia narrative that the mainstream media in America has been trying to propagate and promote over the past number of months, Dave. It's been shown to largely be a complete nothing sandwich, or a nothing burger, as it's been referred to. But these clowns at CNN and CNBC, the Washington Post, the New York Times, they seem to, every time they're made to look like fools for pushing this narrative, they seem to double down and try to sensationalize new granules of nothing regarding Trump and Russia, or people around Trump and Russia. So they just don't seem to have any interest in admitting defeat. And it's not just the Democrats that are involved in this. It's really a bipartisan effort, because it's the highest levels of the Republican Party, with Eddie Munster, Ryan, and McCain doing everything in their power, seemingly to me anyway, to undo or delegitimize the Trump presidency. So no, I don't see them going away. It seems to me that they continue to put up roadblocks and try to run interference. Whether it's in Trump's ability to select and name people to key government positions, to fill out the roster in his administration, they've just been running interference perpetually. I mean, Trump, by and large, his administration is still being run in many key positions, is being run by holdovers from the Obama administration, simply because the vetting process for potential Trump administration people has been gummed up by the bureaucracy that was left in place by Obama, and he is being prevented from governing effectively. But all that being said, I think Trump has accomplished a great deal. So illustrated by his taking America out of the this climate hoax, the Trans-Pacific Partnership, one of these sovereignty usurping trade agreements, which are complete boondoggles for concentration of power in foreign lands. So, I don't see them going away. They're going to continue to kick up the good fight. And just recently, we've seen Obama join forces with George Soros to foment more difficulties on the domestic front for Trump. I mean, this is the first time, at least to my knowledge, this is the first time in American history that an ex-president has basically gone to work directly opposing an incumbent or a new president. It's unprecedented. So no, they're not giving up. If anything, they're doubling down again.
Yeah, it looks like, I mean, there's parts of me saying that, globalism, he's trying to chip away at it. And the other part is saying that they're fully, completely still in control. I mean, look what happened. I mean, especially with the precious metals market and especially with what is happening with the central banks and the economy and things like that. I mean, the precious metals market, they've been controlling for a very long time. And I'm talking about it's either the U.S. government, the central bank, or maybe the banking system. You might have a better handle on who's actually controlling it. But we saw just a couple weeks ago, silver was, I mean, it was smacked down, and people were saying it was a fat finger error. It was a glitch. But we've seen these before. It's not like, oh, this is something new. But they're still trying to suppress gold and silver. That hasn't changed. The question to you is, why are they still doing this? Why do they want gold and silver suppressed? And what's your take on what happened during this silver smackdown?
The reason the precious metals are suppressed, Dave, is because they represent the go-to alternative to the fiat U.S. dollar, and as the historical go-to alternative to a currency that's being debased and defaced by the people who have the power to print it. This becomes, or this puts a big target on the back of the precious metals, in that they can't be seen to be viable alternatives, at least in the eyes of the people who control the plight of the U.S. dollar. So it's under precious metals have been under a constant and persistent attack for the very longest time. And as to when this is going to end, I do believe there is an end to this suppression, and I do believe that the suppression ends under a scenario where promises are made to deliver physical metal, and the physical metal is not available to deliver, and there will be a default. And it might not be called a default. It might be a they'll try to dress it up or put a beard on it and call it force majeure for different reasons. But the end game will be that precious metal will not be delivered to somebody who has demanded it, and when that occurs, the paper markets, where infinite supply is offered for sale by agents of the powers that be, the mustard of providing infinite supply of paper to a market where the underlying physical commodity is very rare and in very finite supply. The infinite supply of paper versus the very finite supply of the physical metal that underlies the paper contracts. I think most people can imagine how that doesn't work out long run. It's not a sustainable model, because the whole idea that these paper players can throw at the market 3 times global annual production of gold in a 3-day period. That's just a dog that doesn't hunt, or at least it doesn't hunt very long, because people see it for what it is. And ultimately, I'd see the precious metals markets moving to cash and carry. But I'll tell you there's been some interesting developments that have been brought our way. One I'd like to just bring to everybody's attention, or highlight it, because it's not really all my work, but Craig Hemke, or Turd Ferguson, as he's known in the in our community, he's the proprietor of the Turd Ferguson Metals Report, and he put out a paper earlier this week where he was making an observation that J.P. Morgan seemingly has stopped accumulating gold and silver as of March of this year. And when I say stopped accumulating, the amount of gold and silver flowing into their depository has ceased. And the amount of metal in their depository grew very rapidly between somewhere around 2015 up until January or February of this year, and then it's just stopped. And it had been growing at a very aggressive rate. Literally every contract, every contract as it matured, they would be accumulating a lot. And something that I found really, really interesting was that JP Morgan got into the depository business with precious metals back in April of 2011. And for people who've been following the silver market for any amount of time, knows that it was May of 2011 when we had our famous drive-by shooting in the silver market, where the silver market plummeted from $49 down to $42 within seconds of trade opening on a Sunday night, and that marked the collapse of the silver market to basically down to the levels that we see today, $16, $17 range for silver. And I find it very interesting that literally right at the time when JP Morgan got involved in handling physical metal, silver price collapsed. Because it has an eerie similarity. If you want to go back to the 2006 time frame, J.P. Morgan started trading natural gas, and it was literally at the very moment that J.P. Morgan opened up a natural gas trading desk that the price of natural gas plummeted from $16 down to where are we today? $2 or $3 for natural gas, and it's no coincidence to me, because I don't believe in coincidences to begin with, but I find it very interesting that the minute JP Morgan entered the natural gas trade, the price of natural gas collapsed, and then we had the collapse or the bankruptcy of Amaranth, which was a big natural gas trading facility, a hedge fund, back in that time frame, and JP Morgan had been serving as Amaranth's banker and Amaranth's broker to purchase and to trade natural gas contracts, and Amaranth was basically a long fund on natural gas, and lo and behold, JP Morgan entered that business and basically took the other side of Amaranth's trades and crushed them. and I've written about it. Articles are in the public domain that I've written regarding JP Morgan and Amaranth's demise, and how correlated JP Morgan's entry into that market is tied to the collapse of the natural gas price. Well, and isn't it interesting that once again we can tie J.P. Morgan's entry into the warehousing of physical metal to the collapse of the price of silver? Anyway, I have to do some more work on that, and there'll be a paper coming on that. But the coincidence of these two very strategic markets collapsing when J.P. Morgan makes entry into these markets really stands out like a sore thumb to me.
Yeah, I don't believe in coincidence. This is exactly what they've done. They saw an opportunity, they were prepared, and they brought it down, and it wasn't a coincidence. And we could see it all over the entire economy. I mean, with manipulation going on everywhere. It's not just in one little area, but there is one area where we can see what kind of an open market looks like in the crypto market, where we're seeing the ups and downs, and things actually make a little bit more sense than they do in the precious metals market, in the stock market, in the economy with the manipulated numbers there. And every time I look at the crypto market, I think, wow, if gold and silver were able to trade freely like the crypto market, we would see the ups and downs and the prices moving up like this, just like the crypto market. I wanted to get your take on what you think is happening in the crypto market.
Well, I agree fully with what you just stated, and to be quite honest and frank about it, I believe that the gyrations that we are seeing for instance, in Bitcoin, where the price can be up or down $300 in a day, is exactly what gold would be doing if the gold market was not shackled and strapped to a gurney, compliments of the likes of J.P. Morgan, Goldman Sachs, and Citibank, who by the way are the agents and the let's just say they're the go-to people in the or interface with public markets that the Exchange Stabilization Fund, the secretive arm of the U.S. Treasury, passes their orders to through the conduit of the New York Federal Reserve Trading Desk. And, you know, and I want to get to this point of who's really behind the manipulation. And I've discussed with a lot of compatriots in the alternative universe that it's my contention and belief that the Exchange Stabilization Fund, whose mission was created in 1934, and its mission was basically to defend and protect and preserve and promote the use of the U.S. dollar and to protect its primacy as the world's reserve currency. And I believe that the ESF is behind the manipulations we see in the capital markets, or the bulk of the manipulations we see in the capital markets. And if you've ever taken time to watch Eric de Carbonell's expose on the Exchange Stabilization Fund, which you can view by going to the website marketskeptics.com, and if you look in the right-hand margin of the homepage, you will see a link that'll be headed by the words "something I've been afraid to blog about," the ESF. And if you click on that link, you'll come to a 5-part YouTube expose on the Exchange Stabilization Fund. And what this expose explains is the relationship between the ESF and the Fed, and how the ESF is the real muscle behind interventions in international markets, but the ESF doesn't like to take the credit. They're happy to have the Fed take the credit or be assigned the credit for the aberrations that they create in the capital markets. And the reason I think it's important for people to understand that. So anyway, let me just first say this. The expose on the ESF explains the relationship of the Federal Reserve being the prime broker for the ESF. All ESF orders are passed through the New York Federal Reserve Trading Desk, and then the New York Fed disseminates those orders off to the commercial banks. So these would be the behemoth American derivatives houses, which is principally 5 big players. And the 5 big players in U.S. derivatives, and when I say the biggest players, these 5 players hold like 99% of all derivatives held by American financial institutions. So, and these 5 institutions are J.P. Morgan, Citibank, Bank of America, Goldman Sachs, and Morgan Stanley, the Magnificent 5. So, the reason I think it's important to understand that it's the ESF that really controls things is because if you're going to effectively go to war with an enemy, you have to know who your enemy is. And I think a lot of people are misplaced by perpetually blaming the Federal Reserve for all that goes wrong. And I'm not saying the Federal Reserve are good guys or the Federal Reserve is a great institution, but I'll tell you one thing. I think it's very clear to me the reason why the Fed does not ever want to be audited, and there's been so much resistance on both the government side and the banking side to a real audit of the Federal Reserve, because an audit, I do believe, if it was transparent, it would very clearly show that the Fed is acting for the Exchange Stabilization Fund, and it's really people who have captured the bureaucracy, or that America's government is in fact been basically taken over. And I think it's important to get that straight, because if things are ever going to change, I think what needs to happen is the real culprit behind these interventions and this market rigging. The true culprits have to be identified. And ultimately, the power, at least to me, rests with the Exchange Stabilization Fund that has dark money at its disposal that I believe amounts to many, many trillions of dollars of undeclared and unseen money.
So, Rob, who actually is running the Exchange Stabilization Fund? Like, is it the Treasury Department? Is it one individual? Is it a group of people?
Let's just say the name on the desk or the name on the office door where the ESF is run from is the Treasury Secretary. And I would believe, let's just say it's part of the executive branch of government. And let's just say, and I've stated this recently, I actually am at a point now where I really wonder if Donald Trump really got to select his choice for Treasury Secretary. I wonder if that was something that he was maybe very frightened by in the between Election Day and his inauguration. Trump visited the White House, and Trump referenced and I mean, when he was sitting in the Oval Office with Obama after the election, when he had won, there was an impromptu press conference that was given where Trump looked like he had an extremely frightened look on his face, and he made reference to when he said a few words, he made reference to he found out some things that he didn't know, or there were some surprises. And I'm wondering if the surprise or one of the surprises might have been him being filled in on the extent to which the Exchange Stabilization Fund is a presence in our capital markets. And I literally wonder if he might have been told your picks for Treasury Secretary are A or B. And this way, when Trump picks what he picked, which ended up being Steve Mnuchin, he can say, well, I picked him. Well, of course, you picked him, but you were given, you had a choice of A or B, and you chose A. But is that really a choice? It's sort of like if you think back to the time of the or think about the Chinese political system, and do people really have a choice? Like, is there anyone on the ballot in elections in China other than people who are members of the Chinese Communist Party? And I question whether Trump might not have really had a choice, and he was told it's going to be A or B, because the powers that be that really do control the U.S. government, they own it. They own it. And like, America's an occupied country, and there's a lot of people who talk in those terms in the alternative press. And I just wonder how deep the control goes. And I actually wonder whether Trump really did have a choice. Like I wonder if Donald Trump had said he really, really wants to have Catherine Austin Fitts as his next Treasury Secretary, whether that would have been allowed.
Most likely not.
So, and I frame it up in those terms. And that being said, I don't think Catherine Fitts would be interested in the job. But I mean, to me, she would make a wonderful Treasury Secretary, completely wonderful Treasury Secretary. But for some reason, I just don't think that would be allowed. I don't think she's on the approved list. And I think you have to be on the approved list to be considered for choice. And I don't think the approved list is designed by the president. I think the president is dictated to and told, these are your choices. And this way, when he picks one, he can say he chose. But it's it's really all it is. It's a legalese sort of thing where you can, you have culpable deniability, and you can say hogwash. I chose the person. Well, yeah, you chose the person from a pool of two. It's not really a choice.
You said the ESF, they're the ones propping up the dollar right now?
I believe so, yes.
Do you see countries dumping the dollar?
Yeah. Countries have been, over the past 2 years, on a net basis, countries have been lightening up on their U.S. government securities. And the countries that have been lightening up over the past couple of years include China, they include Japan, they include Saudi Arabia. And these are countries that are traditionally America's largest financiers. So my question has been over the last couple of years, like I can't really point to any entity and say this is who's buying the bonds that are being liquidated by America's typical lenders. So like the bonds are disappearing. The bonds are being sold. And my belief is they're being memory hold. They're being bought by dark money out of the Exchange Stabilization Fund, and this is why the bonds aren't showing up in the ledgers of any other countries. So you inject dark money into the markets, and the bonds come out of the market and they go into the dark hole. And what logically would you have as this would be philosophically, this would be a very inflationary type of activity or action. And lo and behold, what do we have? We have real estate markets around the world that are just going up at tremendous rates. Real estate's bubbling. I live in Toronto in Canada, and the real estate market in Toronto, it's just been on fire, as it has been in Vancouver, as it has been in London, England, as it has been in many cities around America. But this is not something you would expect to happen when there's less money around.
To me, what it sounds like you're saying is that they have the ability to control almost every aspect of the economy by, pushing money into real estate, by keeping precious metals down, by dictating to the Fed what they want them to do.
Yeah, but look at it from this standpoint, Dave. The Federal Reserve tells us they haven't been engaged in QE for years, a few years now. It's not the Federal Reserve that's doing the QE. It's the ESF. So the Federal Reserve can actually make the statement. They're not engaged in QE, but the ESF is, because the ESF will always make sure there's a bid for U.S. government bonds. Here's another very interesting factoid, which I'd love somebody to explain to me. You see, Germany, for instance, who is basically viewed as the best credit in the European system, and Germany has in the past had failed bond auctions where they could not auction bonds. Failed auction. There wasn't enough bids to cover the amount of bonds they wanted to sell, and it's happened on many occasions in Germany. But America's never had a failed bond auction, not publicly anyway. And I'll tell you, there's a reason why America has never had a failed bond auction, because they have the ESF in the background, who will always make sure that bids, a sufficient number of bids are made, that they have a successful bond auction. You can take that to the bank, because I'll just tell you something. There have been times in the last 20 years when conditions have been such that there should have been a failed bond auction, but there never is. And the garbage that we're fed as to how deep and how robust the U.S. Government securities market is a fairy tale, just like the fairy tale of 9/11 and a building falling, a 50-story building, Building 7 in the World Trade Complex, falling without a plane hitting it. It's a complete fairy tale. And it's a complete fairy tale to suggest that the U.S. would never have had a failed auction. Well, and the only reason they haven't, it's because there's this entity that's there in the background with literally unthinkable amounts of money, and they're there to provide a bid. So there's always a bid. That's why there is always a bid for U.S. government securities.
Do you know where this dark money comes from? Like, how's it flowing into the ESF?
Well, the ESF was created in 1934, Dave, and the way it was created is the U.S. Treasury confiscated gold from the American public, and the gold was revalued. The Treasury, when they confiscated the gold, they paid everyone $20.60 or $20 and change per ounce in fiat money. And then 6 months later, they revalued that gold up to $35 an ounce. And that created a windfall profit of between $2 and $3 billion in 1934. And that money was used to seed the Exchange Stabilization Fund, that windfall profit. That was the seed capital for the ESF. And, $3 billion in 1934 made the ESF the most powerful financial entity on the planet, bar none. Hands and fists above anything else in the world. So, the ESF does not exactly come from humble beginnings. The ESF, in its inception, had a scary, scary amount of money. And if you do watch the expose on the ESF at Mark that I spoke about, the link to which is at marketskeptics.com, you will see that basically the central banks themselves, the central bankers themselves were very, very concerned that so much money was going to be put into such, let's just say, an opaque entity where it was going to be controlled by, basically shadowy forces. So this. I'm trying to deal with your question. You see, the ESF is engaged, is not subject to any laws. The ESF is not subject to any oversight. The ESF does not produce, contrary to what anybody else might tell you, the ESF does not produce comprehensive annual financials. They are free to trade in absolutely anything they deem relevant to their mandate. So, if it's relevant to their mandate to have regime change in a country, they're engaged in that. If it's relevant that they're involved in shadowy arms dealing, they do that. If it's relevant to be involved in look, you name it, drugs, you can go to some pretty dark places. So, the notion that these guys have unthinkable wealth is not really a stretch when you consider the range of what they are capable of dealing in, which is anything. They don't pay tax and they don't produce financials. So you tell me what a $3 billion animal created in 1934, basically subject to no rules, no tax, no audit. And the other thing I will also mention, whereas the ESF has no oversight, the Federal Reserve does have to come before Congress twice a year, and the Senate Banking Committee, and answer to lawmakers under oath twice a year. No such rule applies to the ESF, and it's also very interesting to note that nobody in Washington, nobody in the mainstream financial, nobody on Wall Street, nobody will talk about the Exchange Stabilization Fund. And any politician or any banker that would start talking honestly about the Exchange Stabilization Fund would be as welcome as Edward Snowden, because it's a matter of national security. And of course, the preservation of the dollar as the world's reserve currency is a matter of national security, because that's what America is. But it's really a lot of smoke and mirrors. That's what it really is.
As countries continually move away from the dollar, what are these individuals going to do? Because their whole system is based on having the dollar as the reserve currency and having control over the world.
Now, listen, other countries, Dave, are coming up the curve and get it. Other countries realize that there's a reason why America can do things that nobody else can. And it's not intuitively because Americans are smarter or because Americans work harder. It's because Americans have these they've got these trick things that are put in place that people are getting jiggy with. That's why countries around the world are negotiating bilateral and multilateral trade agreements amongst themselves where they exclude the dollar from settlement and trade. And these deals are being negotiated all over the place and have been being done so now for the last number of years. This is why countries are wagering into or wading into the cryptocurrency realm, because the cryptocurrency realm doesn't allow for an exchange stabilization fund type of entity to manipulate it. You can't have dark cryptocurrency. Cryptocurrency is legitimate. It's basically tamper-proof. Okay, and that's why there's been a lot of countries have been loath to endorse it. And I will say this: cryptocurrencies and the adoption of cryptocurrencies stand as a very, very, very big problem for U.S. dollar preservation of the U.S. dollar as the world's reserve currency on a go-forward basis. It absolutely stands as an impediment. So, where the cryptos go from here, I think they're going to continue to be adopted. There are aspects to the cryptocurrencies that scare the living daylights out of me in that, cryptocurrencies are dependent on a free and functional and operating internet, which means that the power grid isn't interrupted. And that sort of doesn't sit well with me, because I don't think it's a given that we will always have dependable power. I don't think it's a given that we will always have a free internet. So, where do we go from here? But let's just be certain on one thing. The reason the cryptocurrencies are exploding in value is because they represent another anti-dollar trade. Just as a run into physical precious metal is an anti-dollar trade, the rush for cryptocurrencies is also another anti-dollar trade. And the reason these things are going up is because the traditional go-to dollar alternatives have been neutered and have been strapped to the gurney. And I'll tell you something, they won't remain strapped to the gurney forever. And their time is coming. But it's going to be physical precious metal that's going to appreciate, not the discredited paper derivatives of metal. So anyway, that's where we're headed. And how fast we get there is anyone's guess. Timing could be short. Timing could even be immediate, because we could be in a window right now where a complete and utter reboot of our financial system might have to be undertaken at any time going forward. So we're living in unprecedented times, Dave.
Yes, we are. Rob, thank you very much.